I'm, I'm happy to say that Jim Watson was actually the first person to be presented during this webinar series back in March, in the early days of this unusual period of time in our country and in our world. Jim gave you a sense of where the market was back at the beginnings of the pandemic, and we've asked him to come back to give you a sense of where things are now and see how that fits with what you're seeing in your business, what you're observing in the marketplace. So we're very pleased to have Jim. Jim's gonna, as I said earlier, Jim's gonna do a 20-minute or so slide deck, and then we'll launch into a discussion. And we'd love to have your input in that discussion by sending a question to me. So with that, I'll turn it over to Jim Watson to lead us through the discussion. Thank you, Jim, for joining us.
Thank you very much, Jim, for having me here today. It's great to be back. So good afternoon, everybody listening. I'm going to take you through a little bit of what we're seeing, especially focusing on, what's changed over the last, 4 months since I've been on. But if we go to the first slide, I just want to start with a little background to kind of show, where the market has been in the 4 years prior, because I think it'll help us understand, how what drove a lot of these trends is changing right now. So this is dollar sales growth in IRI across, the 3 main alcohol categories, and I threw in 2 non-alc categories for comparison. And if we think about what was driving these trends, I mean, there are a million factors driving these trends, but one of the ones that really leaps out to me is the level of innovation in the market. So for instance, for something like soft drinks, we would have seen the last 2 years as, massive kind of change in price pack architecture and lower sugar products has, really reinvigorated that category. Coffee had great growth on a platform of people adopting new kind of a single serve, push button at home brewers, but we haven't seen much innovation there, and the growth has trailed off. Beer on this side really has, rebounded wonderfly, best in this class in 2019. A lot of that certainly was the introduction of seltzer. Meanwhile, spirits has had great growth, all driven by the kind of innovation we saw from, especially in flavored whiskeys and partnerships, including with many BI members, to develop new audiences and new flavors. If we go over to the next slide, and this is a slide I showed. I'm just including it because I showed it the first time, and the mindset right after the lockdown began was really, okay, you've got this massive shift to the off-premise. So the first thing that's most important is just how much did you have on premise? We predict X amount of that to go to the off-premise, and you can see the part on the right. It was this is in our discussions with a number of distributors. Where did this go? Well, it primarily went to national chains, big box stores, much less on the local and independent side. And so, now some of the story as we think about what's going on since this chart has been kind of the winding down of some of these effects. Okay, on-premise is slowly returning, but how is it returning? That massive shift to national grocery and big box is starting to wind down a little bit, and beer and all of the beverages are finding their way into other channels as well. So if we go to the next slide, this is just a look at IRI data. These are dollar sales growth numbers, and I've kind of gone with every recent 4-week period. So starting on the left, that's before COVID. Then you're going to see a little bit of a spike in the second column. The full pantry loading stock up period really happened in March, and taking us kind of through the most recent data that we have available. So we've seen in some senses a full cycle, and in fact, if you look at water, you can see that it really kind of had massive growth, went all the way back into decline, and is now settled out. But I do have a slight feeling of equilibrium the last several periods, and including some of the data that we've heard anecdotally since 628, very similar. We know, well, July 4th was a little bit weak for beer. The following week came out great. So this is a little bit of evening out, and beer was a little bit behind wine and spirits for a while, but we are seeing that gap even out a little bit. There was a feeling that wine and spirits were up, and up so much that they were probably, gaining volume year on year as a total category. But I think some of that feeling is coming off a little bit. And all of this growth that we're seeing here is really channel shift. So it's a lot of it is reflecting what we saw on the previous chart, from before, is okay, all that on premise going off premise. So we're going to see huge numbers here, and it's not necessarily enough to totally make up the gap, but that also covers, these numbers cover massive disparities among the brewers. We do know, you hear stories of some brewers that are seeing volume gains year on year, in total, and some that, this off-premise can't nearly make up for what they're losing in the on-premise, especially smaller, more taproom-based brewers. I also want to point out, in including a number of categories on here, we'll see a couple interesting things. I point you to the energy drinks, third from the bottom, and it's an interesting category. It's been one of the strongest growth sectors in beverages for the last, 4 or 5 years, but it really didn't see any spike early on, and it's actually kind of gotten better over the last few periods. So it's pretty interesting, because I think what we're seeing here is this is not a pantry loading product. People generally don't buy energy drinks by the case, not certainly the way they do with virtually every other category on here. It's also very convenience store heavy. So the return of energy drinks to slightly better growth numbers is probably reflective of the convenience store channel really starting to come back, as into growth compared to big box stores. So we're winding down that big box store. This, of course, means something for beer. We know certainly that bigger brands and macro brands tend to over-index a bit in the convenience channel. So as that channel returns to growth a little bit, it's going to benefit the brands that are there as well. And bottled water is interesting. I mean, this is, again, there is a little bit of pantry stocking that you saw early, but it indicates how much of that was, the big spike there was probably panic buying ahead of a lockdown where we didn't know what was going on. And now that there's increasingly a little bit more certainty around your day-to-day life, that we don't need that stock up of water at home anymore. So, that really has been one of the least growth categories. If we shift over to the next slide, I want to go through a little bit of, well, let me explain this chart to you. So what I did is I went through IRI and I picked out, kind of the 15 top SKUs, and some of these are kind of brand families more than individual SKU, in terms of how much they've grown in dollars over the last 16 weeks. But I didn't want to focus on specific brands and get into anything around brand strategy, because that's not the point here. The point is, about which categories we're really seeing growing. So I took everything and just kind of classified it by category. You might be able to guess. You can do that on your own time. But I think what was interesting here is these brands that we see really are not reflective necessarily of what grew from 2016 to 2019. So, I'd previously done this chart and done the, top 12 gainers over the last 4 years and the top 10 declines. And so, of the top 12 gainers, what we really saw, and these were the seltzers and imports primarily, along with, the kind of above premium light lager. And that was, defining that growth. What we saw, in the categories that were declining, we saw a lot of the classic premium light lagers were, among these brands that gave up the most dollar value. So then when we combine it for the last 16 weeks, it's as if someone took the entire beer industry and just shook it all around, and now it's growing is almost a complete mix of the brands that were winning anyway, and half of the brands that were actually struggling the most coming into this period. So it's kind of a fascinating reorganization of what's going on. And you have to think about, okay, so why would this totally change? It's easy to say, a category like seltzer, fine. A lot of what we talk about is the acceleration of trends. If something was doing well going into COVID, a lot of people feel, okay, this will just accelerate a move towards that category, and that's fine, and that's what we're seeing. But I think a lot of what we're seeing in terms of growth here is almost less brand specific, which is why I took brands out of here, and more to say, where is this, what needs does this category meet? But where is it available? What channels is it in? What sizes do you sell it in? I mean, availability also doesn't just mean, what channels you're in, but also means, are you out of stock right now? And that's a significant driver as well. And of course, all of this in the shift to, more big box retail has tended to be the big brands. So when we shook up the entire beer category, who was left to take all the growth was a lot of the brands that were either massively growing already or among the biggest. And this does get into a little bit of the SKU reduction as well. So Coca-Cola put out a wonderful slide in its most recent quarterly slide deck, so just a couple of days ago. And in it, they were talking about, they're reducing what they call their zombie brands. And they said of their, kind of 400 brand families, if they group them, they can get less than 50% of those brands generate 98% of company revenue. And so a little bit more than 50% generate about 2% of company, global revenue, which is pretty fascinating. We've seen at the same time, across beer, but across other food segments, there has been a notable SKU reduction. So if you look at the data, I've seen kind of anywhere down 8 or 10%, since the beginning of the year, number of SKUs carried. So all of that gets into the same thing, whereas the big brands that can be doing the massive volume are clearly winning, and that's for a number of the brands and categories on this chart. What we're seeing here is a complete reversal of not just years, but in some cases decades of trends. And in so much as SKU reduction is going to stay in place, some of these gains may stick around. Although we will see, we do expect a fair bit of reversion to the mean over time. If we go to the next slide, I want to talk just quickly about pricing. We're in a recession right now. And so what we're seeing on this chart is fairly interesting. On the left side, this is basic IRI data. I did volume versus pricing. I mean, no correlation, but just say pricing has been fairly consistent. Those are tiny changes in year-over-year price growth, for the last 4 years. But then on the right is what we've seen kind of in the COVID period, and we're seeing a big spike in pricing. So there are, a couple things here, and this is scanner data. So traffic to retailers has been massively strong. So, you get two things out of that. One, consumers are probably not spending as much time price comparing in store. So everything we know about consumer shopping patterns is you're a little bit more wary of taking your time to make, lengthy decisions in the store. So you are going with bigger, more familiar brands, but you're less likely to do the next level of price comparison. And more importantly, there just isn't a need for retailer-led discounting. And we know not just in the beer industry, but across the soft drink industry as well, traditionally how much of sales is driven by which of the competitive brands are kind of on discount for that week. So taking that out really shows the impact of that across the beer world. And so I would say this pricing doesn't necessarily reflect anything we're going to see significantly long term. But I think compared to what we would have thought 4 weeks ago, you tell me coming into a recession that we're going to see a significant spike in the prices we're seeing, and it's not just beer, it's across other categories as well. That would have been fairly interesting to me, and I wouldn't have anticipated that to be the case. If we go to the next slide, I just wanted to bring up the idea of different consumers. So we did a podcast pardon the plug for podcasts. We have Rabobank, a beverage podcast, Liquid Assets. We try to dive into, the strategic issues around the industry. And we had Danny Brager on from Nielsen, who is in their alcohol practice. And we talked about two different types of consumers, an insulated versus a constrained consumer. And so for the most part, when we enter a recession, we're mostly focused on constrained consumers, feeling, most consumers will have either, if not job loss, job uncertainty, and will be very wary about spending. In this case, insulated consumers, and so we still obviously have that consumer. Although in this case, with expanded unemployment benefits, even constrained consumers may be advantaged compared to, early on in previous recessions. Insulated consumers is also a really interesting case. So for consumers who are not faced with, job loss, immediate job insecurity, and who feel confident, they generally have significant additional spending power in that they are not traveling, they aren't going to big events, they aren't spending on premise a lot. So, we're seeing a little bit where, a greater number of consumers may be on the positive side of being able to spend more, given how much spending they've been, not allowed to do in venues that often take up a lot of disposable income. And so, and pulling consumption at home is massively cheaper. So if we go to the next slide, I pulled something from the coffee world here. And so these are in IRA, the top 20 roast and ground brands. The bigger bubble is just the bigger brands. But what I did is I plotted the price point across the bottom and the percent year-over-year growth on the vertical axis. And I mean, the obvious takeaway is there's a fair bit of premiumization here. The most expensive brands are doing the best. And, you could even say, perhaps if you squint, there's a little bit of a barbell effect where there's some, strength on the low end, the middle doesn't look quite as strong, and the premium end looks the strongest. And what we've talked about in the coffee world is these are people bringing their brands home with them. So if you were a shopper and you went to a coffee shop every day, you're trying to recreate that experience at home. So you're going to now, when you translate that to a retail environment, you're going to be buying probably better beans. And of course, what's interesting is if you buy coffee at a coffee shop every single day, the amount you're spending means you could go to the grocery store, you could spend significantly less and still buy a much higher quality of bean. So it's really going to look like premiumization across the supply chain. They're going to see higher priced beans being sold. Even if to the consumer, it may not be premiumization, you're losing out on an on-premise nice experience, but you are getting, something fairly nice at home. But one of the other places that, consumers, in trying to recreate some of that coffee shop experience, not all retail can match what the on-premise selection is when you're trying to do that. So if we go to the next slide, I think we have to talk about e-commerce a fair bit, because that has been one of the massive growth stories of the last 4 months. And so this is just a number of different channels kind of showing growth rates that kind of make you go crazy when you look at it. But this is what had been perhaps side projects for many companies across our beverage industries in terms of building out e-commerce platforms and their own strategies. Has really become absolutely primary for a number of them. So we're seeing, significant investment, kind of in teams and back-end data. These models are also interesting because they represent a lot of different things. Whereas wine.com and Drizly are online marketplaces. They're growing a lot, but so is online grocery. So this is just simply, are you going to order on Walmart, or are you going to, in the store, you're going to order on Walmart.com. A lot of retailers are seeing massive growth in this. So this is probably, again, a place where beer sells a lot in all these channels. They're going to sell a lot online, and it's coming pretty rapidly. Direct to consumer has also been, a huge spike. Especially for wine, but we have had a number of conversations, about this with beer companies. And actually, on the next slide, you'll see this is a model of wine, and I just included this. We've had in the beer world, we've had a number of conversations, and interestingly, we've had them, with kind of people, brewers of all different sizes, trying to go direct to consumer, and it's been massively successful in wine, which is why I included this. So it's, we kind of estimate 6 billion in sales. That would have been 2019. And this has been something that has really insulated a lot of the kind of very high-end long tail of the wine industry so far, but also provided growth for new platforms as well. In beer, it's probably going to look a fair bit different as it develops. And when we think about what it might look like in beer, it really has to stand in opposition, not in opposition, but as a supplement to what would be going through a typical retailer. So you're looking at something that, it meets very different needs. It's going to be high end. It's going to be experimental. It's going to have a focus on relationship building. And definitely, you don't want to be in competition with your local retailers. So it's not necessarily about shipping out, cases of your most popular product. That's not the use of DTC for, most going to be for most brewers, but it is going to be about, that innovation segment. And if we go to the next slide, I just want to talk a bit about how we look at the growth curve for e-commerce. So right now we're in a huge spike, and a lot of this spike, of course, is built by people who cannot get to stores or don't feel comfortable going to stores. And so, there's a little bit of people driven to e-commerce that it's not a natural fit for. So we do feel like some of that is going to come down as it becomes easier to go to stores, and it certainly already is. Some people are returning, although the growth rates for e-commerce are still staying very strong. But what we think is there's a lot of investment going on. Virtually, every company we talk to is, if not building out, distinctive strategies, they're putting the teams and data in place, which they have to do first before they can get to, really new growth strategies. But we think over the long term, we're really going to see both a higher set point for e-commerce and a better growth rate. And so if we've talked about kind of retail chains getting a lot of growth and e-commerce taking a lot of growth, I want to touch at least quickly on where some of that growth is coming from. So on the next slide, we see a little bit of the food service world. And first, I just wanted to compare it. This is, I've got a colleague in the consumer food side who's done some great work, on this subject. And this already, from a food service perspective, looks totally different from the last recession. And in fact, a lot of this recession looks a bit different than the last recession because so much of it is on versus off premise and not just overall spending. But yes, so simply, whatever's going on now, we're going to take a lot longer to recover from. It looks very different. And certainly who recovers the fastest and what comes back, as that sales comes up, what channels that's in is going to look very different. So on the next slide, you'll see a little bit of a breakdown across different types of on-premise and comparing them across the different lockdown scenarios. Just to understand those scenarios, I mean, that's basically from, lockdown being the most serious. You're really not supposed to be leaving for anything but essential, business or purchasing, to a recession being like basically everything has been pulled back. All restrictions have been pulled back, and then we're just, in a recession now. So what's interesting is, certainly how massively different each of these chains, these segments get hit. And so obviously bars and pubs get hit a ton in lockdown. Going to a bar was not essential, and even in the semi-lockdown. But by the time we get to a recession, the impact on bars and pubs isn't as bad, where full service restaurants, managed to get by with some to-go business, from the beginning. But we are a little wary of the ability of full service restaurants to come back at full strength. Indoor dining over a long period of time is going to be difficult to recover. And so that's, I think, what we think what is going to be one of the most hard hit areas where bars and pubs, at least in the summer when we can all go outdoors, do have some different routes around this. On the next slide, I want to talk about just the difficulty in recovery. So this is a map, and this is actually just from the beginning of the month, so things have already changed from here. But you can see in the lightest color, those are places where a lot of bars are asked to be closed, and then there's newly closed in a number of other locations. And even just saying closed and new, doesn't capture the on the ground minutia of the restrictions actually in place, which is far more complicated than you can put on a simple map. But I think this is interesting because it's not just about where it's closed, but it's about where things reopened and then closed, and how much uncertainty there is, for folks in the hospitality business. This is not a clean recovery. I think we said last time, it was going to be, in peaks and valleys, and we're seeing that really quickly come true. And so, it's been difficult. Even New York on here, which shows reopened, but we know there's now, an extra food requirement put in. So virtually everywhere, there are, new difficulties coming into play. And on the next slide, I just show a little bit of, what's happening at the brewery side of this. So these are, on the left is a Brewers Association survey, and this came out in early April. So, I have that here because I think it's interesting. So many people on this survey said they weren't going to make it 3 months. Well, it's been 3 months, and we certainly haven't heard about half of, small brewers closing. And at the same time, we've got, there's a letter from the Florida Brewers Guild out just this week, talking about, a massive number of closures, if the government isn't able to kind of take back some of the recent restrictions put in place. Now, these are people talking about their businesses as opposed to actual closures. And so it's interesting that we haven't seen it in the data yet, a significant number of closures, but the anecdotes have probably gotten worse. So I feel that, we went through a period really of a bit of false optimism. Now that we know about the potential of recovery, that it was going to be, potentially a little bit more smoother and faster. And so we have a lot of, bars and restaurants that went into this thinking, okay, if I can make it through a little bit, yes, I'm operating in a loft now, but I can get through a bit. And if we keep recovering, I'm going to go for it. As we get back into these reclosures, and the time horizon for full recovery really gets pushed out, I think we're going to start to see, and we're already hearing about this, more on an anecdotal basis, but the closures are going up, and more of the businesses that have closed are becoming permanently closed with no plans of reopening. So that's only getting worse. Just a couple more slides left. So on the next one, I just wanted to show what a recovery actually looks like. So, this is open table data. This is just the number of reservations they've taken versus, the same time in the previous year. And I included Germany because Germany has been kind of held out as an economy that's recovered really well. One of the interesting things is even Germany, which had has had a good recovery, that's really bumpy data. So, nothing, even if it goes well, is going to be smooth or easy about a recovery. And so we are going to have probably more false starts coming out of this. We've leveled off a little bit. And it's worth saying, I even tried to smooth this data out a bit. So I did a 7-day moving average to try to, work across weeks. But, it doesn't necessarily help. So it's going to be a bit of a rocky recovery. On the next slide, we'll see what is nice is that as, recently as cases have increased a significant amount, consumer spending has actually stayed pretty constant. So at first, early on, you would have seen, a near direct correlation, negative correlation, cases went up, consumer spending really bottomed out. We haven't seen it this time. I think, there is a much greater understanding of what's going on with the disease, how we can, kind of operate economically with it, within these boundaries. So, I will take that at least as a positive sign that, the economic recovery in this sense isn't necessarily slowing down due to the most recent spike. And hopefully if some of that comes under control, we'll continue to see the consumer spending come, back near original levels. And on the last slide, I just talk a little bit, I have a graph from our European team. And, this is just employment in the US. I pointed out it's from Europe just so you can understand the dates at the bottom are in the Euro format. A lot of employment has come back, through the beginning of July, but it's still limited. There's still massive unemployment in some sectors, as much as 50%. And I'd say, we're in a recession, and I've talked very little about traditional recession effects, even having seen premiumization in the market. It's very unusual, and we've been kind of able to get away with ignoring it for now. Certainly, the additional unemployment benefits have done a lot of that. As those roll off, we may see significantly more in the way of traditional recession effects, which means trading down, which means price pressure. That we haven't seen so far. Our macroeconomists have put out a while back put out a US GDP estimate of down 6%. And that assumes a great recovery in 2021. But they did say, they kind of have to get through a lot of the early recovery to really understand where the US stands, and that's probably the fourth quarter. And so, I think just going forward, I think what we're going to talk about is less specific COVID shifts, as we're coming to really understand better the retail landscape and how people have moved. And I think we're going to get more into the recession effects of the consumer and what they're drinking. And with that, that's the end of the formal presentation.
Thank you very much, Jim. Again, if you have questions for Jim, please text them to me at 202-415-2202. Let's just start right where you ended, Jim, on the recession. I did have a couple questions to ask you about the recession. I was at a restaurant last night, outside under a tent in the parking lot of the restaurant. Every table was taken. So my question to you was I was going to characterize it as a dumb one, but are we in a recession? Obviously we are, a lot of unemployment, other things, but this recession seems different than other ones, is what I'm sort of getting from your last few comments there.
Absolutely. I mean, the first thing I talk about in any recession, right? I just say, okay, we're going to start seeing trading down, and we're not seeing that. Now, staring at grocery store data and saying we're not seeing trading down doesn't necessarily capture the whole story. You may be getting consumers who are spending significantly more. This will happen a lot in wine specifically, and we saw this in the last recession. If you went to the grocery store, you saw what looked like premiumization, but it was really consumers who would have gone out to a restaurant and bought a very expensive bottle of wine that wasn't even carried in a grocery store. But when they go to the grocery store, they're buying something more expensive than the grocery store is typically selling. So the grocery store sees premiumization, the industry and the grower certainly does not. I don't think that's happening quite as much in beer. The selection of beer, in a grocery store is much closer to what you'll find in a restaurant, or on premise in general. But we haven't seen it yet. A lot of it is people have an extra $600 a week on top of what you would be getting in unemployment is a lot. That's wearing off very soon. I know there's a lot of debates on how much that will be extended and how long. That's going to be a big tell. So if that all comes off with no replacement, it may be that very soon after that you're seeing what looks like more of a traditional recession impact on the industry.
So the series of bills that the government has passed, the series of relief measures that they've made right from the very beginning, with probably another bill here in the next month or so, is really sort of forestalling the worst effects of a recession.
It does seem like it. I mean, I honestly would have expected to see more of an impact from a recession so far. So I've been surprised not to see it. But I do think that it is exactly that. We've had some people, be pulled, like furloughed, but then pulled back. I also get worried of the people get kind of pulled back into the office, but then, re-furloughed after that, which is, anecdotal, but it's also kind of what we're hearing out of states that reopened quickly and then got hit by, a surge in cases.
So does that mean the recession will be longer to get out of, to see the end of this thing, or no?
I mean, I do think, my personal opinion, not speaking on behalf of the macroeconomic team at Rabobank, but is what we're talking about in terms of recovery, especially specific to the beverage industry. 4 months ago, I would have said, I started talking about 2021. I would have said, okay, by a reasonable point in 2021, we'll be feeling very comfortable. And now, especially talking with my colleagues across different sectors, you start to hear 2023 and 2024 talked about in terms of recoveries for certain sectors. And that may be more like a full service restaurant would take a long time to recover. But absolutely, it does feel like, as we're not handling the disease terrifically well and cases are spiking, that it's hard to say we're going to be on a fast recovery.
But a vaccine or something could, some other way out of this could help us obviously out of the recession. The more people feel comfortable about their surroundings and their ability to remain safe, the better, obviously.
Yeah, and so much of it is about that certainty, and that's a little bit concerning about, kind of the reclosings of several places. So, for so many hospitality providers, you're trying to figure out back and what business model, and without any certainty of what it looks like, I think your optimism for the future and your willingness to make it through a difficult period so that you can be fully operational in 6 or 12 months kind of goes down a little bit.
So you talked about the fascinating reorganization of categories and brands in the beer business. I just want to ask you a broader overall question before we talk more about beer, which is, harkening on the fact that you said that this thing might go on until 2023. Has COVID-19 changed the way consumers fundamentally go about their behaviors? Or again, if there was a vaccine tomorrow, would things go back to the way they were before?
So I've two ways of thinking about that. One is your core desire probably hasn't changed significantly. Whatever you went as a beer consumer, whatever occasions you had for beer, I wanted, a lawnmower beer, or I want a craft beer that I've never tried before because I always want to experiment. Those aren't necessarily going to change, but certain habits are. If you didn't do much e-commerce, but now you have the login, you've done it, you know how to do it, it's saved on your phone, maybe you have a new app for it. In the coffee world, we're actually seeing a lot where there's a massive spike in people buying grinders for at-home coffee making. And so this is new equipment. Now you've been practicing on it for 6 months. You may have a new habit. So you may say, I used to buy, a pod and I just hit the button, but now I know I can make better coffee by grinding it up, in my fancy grinder, and I'm going to buy better beans. Maybe I join a subscription service that sends them to me. So I think, for those consumers who have adopted a new method, and a lot of that, in that case is route to market, that stuff may be sticky, but that's not the consumer desire changing. That's the consumer's ability to meet their own desires with a new habit or a new ability.
Yeah. Or I got this nice new machine that I now know how to use. I won't go to that coffee shop I went to every day for the $5 latte.
Exactly right. If I can recreate that, and many of those coffee shops, that roaster may be, putting an online, e-commerce plan in place. You may be just buying their beans, and getting them sent right to your house.
Yeah. What's the most surprising? One last question generally, and then we'll move on. What's in terms of different sectors and industries that you watch, what's the most surprising effect that you've seen on a sector, consumer product sector, either positively or negatively?
Uh, the biggest surprise was actually on that beer chart saying, seeing a brand that has been, in decline for decades be one of the biggest gainers in, since COVID is pretty shocking. And to be honest, that's not necessarily, it didn't only happen here. When I look in coffee, several of the biggest brands, that you'll know and you'll buy by the big tub at your grocery store, had the same thing, significant growth, especially early on. What I do think is the delta we've seen between beer and coffee in terms of kind of these old mainstream brands that resume growth, I think it trailed off a lot faster in coffee, and it's been much stickier in beer. And I don't know exactly why that is yet.
That's interesting. So let's just talk a little bit about beer. One of those earlier in your presentation, you had a chart that's showing where beer was over the course of the number of weeks. And you described beer as being in the middle of the beverage pack, but it looked like we're still lagging slightly behind wine, but lagging behind spirits. We've seen beer losing share to spirits over the last years. Before COVID-19 came along. What is that? How do you, in a COVID world, how do you think about that competition for the consumer between beer, wine, and spirits?
It is pretty interesting. I mean, early on, I'd have said, just competing a lot more in big box stores and grocery stores is probably pretty good for beer. I do think wine and spirits both have much more established e-commerce setups. Certainly wine, but spirits as well. And so that's a place. Beer is always going to lag those just on a weight to cost ratio, and there's nothing the industry can really do about that. Beer has tried to do some interesting things with some at-home platforms that I think are, do have potential over the long term. So I think that's going to be, a fair big difference. I actually think there's an interesting thing going on with restaurant to-go orders as well. So we're seeing a number of restaurants, basically regulations have changed in a number of states around this. And so then we're seeing both suppliers and wholesalers develop entire new playbooks for how to get restaurant sales to go. And so we're seeing kind of the ready-to-drink cocktail space and things that are easy to pair with your food and sell to go really booming. And what's interesting is that space is actually a bit of a free-for-all. Literally, companies in every single sector have ready-to-drink cocktails. If you're talking canned wine, again, beer companies have those. And beer companies have actually been, I don't want to say pioneers, but are kind of pushing the next level of that, as a place to grow. And I think that's going to be a fairly interesting, newer channel that everybody's fighting over.
Well, speaking of the sort of innovation there, you talked a little bit about seltzer, and seltzer growing during COVID-19. Are the bigs in seltzer just getting bigger, or are there more brewers getting into it that's driving this growth?
I mean, it's definitely still the big seltzers getting bigger. But I mean, with a category that's growing like this, I mean, the pie is, doubling and tripling. There's plenty of growth for everybody. And I think it actually makes it a fair bit of a healthier category. So even if the two big brands that have kind of been the clear leaders in this space stay there, as not just a number of mainstream brands come in. So right now, if you go into your local grocery store, you're already going to see so many more choices. But then beyond that, you've got a number of craft breweries who are rolling out their own seltzers, and that may be just for very local distribution. That may be for eventually when this reopens, sale in their tap room. But all of that is going to kind of normalize seltzer as whether or not you consider it its own category or just an absolute staple of, drinking culture.
Yeah. You talked about again, you talked about the fascinating reorganization of categories. Do you think that COVID is again, sort of fundamentally changing the beer buying habits of consumers, or not? I guess the longer this goes on, you'll see more and more. But as you say, the beer mix has just been completely shaken up. Is that here to stay for a while, or what, in your view?
I do think for a certain, I think most of that goes away as our physical shopping patterns change. But changes to e-commerce are going to be, what we think they're steadily growing. And so that's a platform where we don't really know necessarily which brands are going to win. So for the most part, craft beer over indexes in e-commerce is, a broad rule. And partially, right now you have a case where big beer is doing so well, and it's doing so well because so much of the volume is going through the channels where it naturally, naturally over indexes. So as a craft consumer, you just have to find the outlet that sells, your beers. But in terms of as sales trip over to grocery online, those platforms are very new in terms of how well, big beer companies can partner with, those retailers and really develop their online offerings in a meaningful way. We don't know. We haven't seen it yet. And we haven't seen necessarily, great, we haven't seen the big initiatives that we will see over the next couple of years. And there are certain things you can do with a marketplace retailer that operates kind of outside of the three-tier system, maybe as like a fourth tier, so to speak. Our beer companies can work with them in a different way than they can work with a retailer, right? So that we're missing those restrictions. Beer companies have been doing that, but hasn't been nearly as well developed. So we don't know if craft is going to keep up those gains, or if some of the bigger brands are going to be able to, find a new place in the market in those channels.
Well, that was sort of leading, what you just said sort of leads to the last question that I have for you, which is, it seems like beer has sort of lagged behind wine in particular and spirits in the e-commerce space. But you're saying it's still a wide open channel for beer to win in. Any advice for the brewers on the phone about how to go about that? You started to talk about that a little bit.
Yeah, absolutely. And so much, I have a colleague, Ricard Nesson, who's done really great work in this space. And so much of when we talk to, our clients about this is for the companies who've done this, they already know, but a number of companies haven't even built out a real a team, let alone a real structured infrastructure. And so much of this is data management through online, as opposed to a brilliant innovative marketing strategy. A lot of it is the back end that has to be done. But a lot of the sales, we anticipate grocery online, which most grocers have seen virtually a tiny percentage of their total sales be e-commerce, and whether or not that's a delivery or click and collect, but it's been relatively small, but it's growing massively. These are channels where brewers win naturally, and there's no reason they shouldn't win online, but they will need a new team, new capabilities, and perhaps new strategies to do it. But it's probably one of the biggest growth potentials in that e-commerce world. So it's a place where you already play. Very
good. That's good to hear. Well, Jim Watson, thank you very much for joining us today. We really appreciate your latest insights on what's happening in the marketplace and in the beer marketplace and alcohol marketplace. Like I said, you were the first one to get us kicked off here, and we continue to build this webinar series into something that we hope is valuable for our members. But you got us started, so thank you very much for that. Thank you very much for today. I don't know if you want to sort of plug your podcast there again one more time, but we'd love you to do it.
Oh, spoken like a true marketer. Thank you. Yes, so the podcast is Liquid Assets. You can search Liquid Assets by Rabobank. We have folks from all around the industry. Our latest two, we have the CEO of the British Innkeeping Institute talking about UK pubs reopening and what they're going through. and we had Tom Cole from RNDC talking about the changes in wholesaling. So, certainly those two for everybody on this call should be quite relevant. They're pretty interesting podcasts.
Totally. Wow. Liquid Assets by Rabobank on Apple
That's
Podcast.
Right. Listen and leave us a 5-star review.
Very good. Well, thank you for a 5-star performance today. So thank you everyone for joining us. Jim Watson, thank you. For the BI members, we'll be back at this next week. The CAN Manufacturers Institute is going to come and talk to you about some of the sustainability efforts that they're working on. And then we have some more ideas for future webinars. So for today, again, thank you, Jim Watson, very much. Thank you all for joining us, and we'll see you next time. Thank you all.